네, 안녕하십니까.
Good afternoon. I am Moon Chang-ho, Deputy Director of GAFSC, and going to be the host today. And I would like to express my gratitude to other participants from home and abroad. This year's symposium is being held virtually in compliance with the COVID-19 and social distancing policies, and simultaneous interpretation is available as well. The second KIPF Public Sector Accrual Accounting International Symposium 2021 will be held under the theme of the role of accrual accounting in fiscal management, focusing on fiscal risk identification, asset liability management for 2 days. Under the 2 days main theme of the role of accrual accounting in asset and liability management, the cases of the 4 countries, UK, New Zealand, Canada, France will be presented today, followed by the discussion. Prior to the presentations, let me introduce Han So-young, Head of Government Accounting Team, GAFSC of KIPF.
Good afternoon. I'm Han So-young, the head of Government Accounting Team at GAFSC. Today's symposium is about managing asset and liabilities based on accruals. To help you get your head around the topic, I would like to share why we chose the topic, and also I'd like to brief you on Korea's situation. Accrual accounting was introduced in 85% of OECD countries, and it is reflected in the budget system. It became an irresistible global trend, and also it has quite a long history. However, we have long faced the difficult question of how shall we utilize accrual information. In 2017, we strived to find the answer through an OECD joint study that investigated the use cases of accrual accounting in countries that adopted the system. And this year, we focused on the financial management items among many useful use cases that we have identified through 2017 report. To this end, we asked researchers from 7 countries to look into these factors: the accrual information used in managing asset and liabilities, and if it does, what information is used and how the result is disclosed. We asked a detailed research request. So today we will hear the answer from the presentation of the UK, New Zealand, Canada, and France, and also we would like to hear about the challenges and difficulties when it is difficult to identify asset and liabilities clearly in accrual accounting-based asset and liabilities management. Our government accounting team believes that asset and liabilities management based on the accrual principle would be making decisions using real statement of financial position or balance sheet. In other words, understanding and using the statement of financial position is also today's topic. Starting with UK Audit Office's balance sheet review series, I'd like to share how it was institutionalized to many financial managers. And also, we also pay attention to New Zealand's very interesting 4-year investment report, welfare budget, and long-term financial statement with a 40-year outlook. Also, please take a close look at how the accrual information has been reflected in Canada's debt management and settlement reports. And I would like to ask you to listen carefully to France's efforts to utilize the accrual information and the critical perception in comparison with the current situation in Korea. The accrual-based statement of financial position helped to improve the calculation of the total amount and provision, and it gave a clear view of the details. However, in Korea, many decisions regarding asset and liabilities are based on separate reports based on budget standards and laws that existed before the introduction of accrual accounting. These reports adopt narrow recognition scope than that of the accrual basis or have different recognition standards. And standards set by law will definitely be clearer and you'll be more familiar with them than accrual standards. However, the standards of the past are narrow and fragmented, and the decision making won't be integrated. Then how would it be if accrual information used in many situations, in many decisions and evaluations related to asset and liabilities. What will be needed to do that? The important message we must hear today is it's going to be covered through presentations and comprehensive discussion. This concludes a brief introduction to the topic. We would like to express a sincere gratitude to researchers from 7 countries who have provided valuable research results. And I would like to really thank them once again for conducting this amazing research together. You worked so hard and it was very meaningful. It was a meaningful experience, valuable experience for us. I hope that we will work together for another meaningful research project next time. I would like to express my gratitude once again to the overseas panelists who have been with us today as well as yesterday, despite the time differences, and thank you moderators and panelists joining us here and online despite your busy schedule. Thank you very much, Han So-young, the head of GAFSC. And she briefed you on the extent to which accrual-based financial information is used and how they vary per countries. And I think she helped us get our head around what to focus on each country's presentation. Let's begin our case presentations. So our first presenter is Menj Kala, the CEO of Kala Consulting from UK. Jay Kala presented on yesterday on fiscal risk identification. Ms. Menj Kala, you have 15 minutes.
Good morning, good afternoon, good evening, depending on the time. 고맙습니다. Thank you for listening to me and for your time today. And 안녕하세요 to the Honourable Chair, to the members, to the delegates and the other presenters. I'm delighted and honoured to be sharing the platform with you. So what will we cover today? We will, if I can get my mouse to work, my apologies. We will look at really a few areas very quickly. What's the evolution? So what's the development of the government balance sheet in the UK? And what were the drivers to really focus the attention onto better management of government assets and liabilities? How this led to the balance sheet review and further work that's really been culminated and brought together in the recent balance sheet report and outlined for the future activity. And spoiler alert, there's a lot going on. Now, we've been on a journey for quite some time, and I think I've been there for most of it. What we started was building the whole of government accounts coverage. Now, the coverage within and the extent of the whole of government accounts within the number of entities that are consolidated in the UK reflect the highly centralised nature of UK public finances. So back in the mid-90s, when many of the state-owned enterprises were being privatised, they were on accrual accounting. Local governments always been on accrual accounting, and the NHS trusts were on accrual accounting. It kind of highlighted very acutely the fact that central government wasn't, arguably the one area that spends the most money. So central government was moving to accrual accounting between 1996 and 2001. And then from central government entities, and that was the first year that the first accrual accounts were published for all of us. We call them resource accounts, looking at how to spend government resources. 2001, 2004, central government entities were developing the whole of government accounts. NDPPs are non-departmental public bodies and devolved administrations. And then in 2004 to 2007, started working on bringing on board the wider public sector, including local government, NHS, public corporations. 2007, 2009, the decision was taken to implement IFRS. Yes, we do use IFRS, but where it's silent, and in our hierarchy, we do follow IPSAS. I think the latest statistic was that we are 93% compliant with IPSAS. So where IFRS is silent for the public sector, we do follow IPSAS too. And in 2009-10, this all culminated in the publication of the first whole of government accounts. Now, we've been practicing the whole of government accounts for a number of years. For 9-10, I think it was either the 26th or 25th of November 2011 that it was finally published. So that's a coverage. But back in 2016, 2017, there's a huge movement really driving the pace of change in terms of moving, really thinking about the government balance sheet. The head of the National Audit Office, our supreme audit institution within the UK, the head is the Comptroller and Auditor General, who is appointed by Parliament. He came in very much from a private sector background, and his view was, well, why aren't we using the balance sheet more to drive decision making? And this was backed up by a series of evaluating balance sheet reports. Huge thank you to the NAO for their contribution to this report. Any errors, by the way, are mine, not theirs. We talked about it yesterday. We have the Independent Office for Budget Responsibility, and in 2017, they published their first fiscal risks report. And again, drew on a lot of the findings that the NAO had identified and from the whole of government accounts. And then finally, Treasury with the publication of the whole of government accounts. But I think the biggest change, if I really had to highlight something, would be this culminated in the Chancellor of the Exchequer, the then Finance Minister, taking the decision to say, right, and making a commitment at the budget, the key fiscal statement of the year, to say, actually, we are going to use the government balance sheet. So things really started to mobilize in 2017. That's not to say things weren't happening before, but I think it brought that really sharp lens focus on using the government balance sheet. So the National Audit Office reports, there were 4, really insightful. I'll just, for continuity and really for time purposes as well, I'll only share one. The evaluating the government balance sheet, the provisions and contingent liabilities. And then the highlights in that report were then reflected in the 2017 Fiscal Risk Report. This is an extract from that report from the OBR. And if you look at the diagram, you can see in 2009-10, provisions are only just over 5-6%, maybe 7% of GDP. By 2015-16, very short time, they've gone up to over 15%. Now that really highlighted an issue. They're not sustainable. What's the quality of our recording, et cetera, et cetera. But the visibility that the whole of government accounts gave us were these kind of insights. And then they drilled down a bit and they were able to look at and identify that the key issue was around clinical negligence costs. So from 2005-6, it was just under 0.4 billion. In 10 years, it's gone up by 4-fold to almost 1.6 billion. It shows you the trajectory that if we didn't do something, that something needed to be done, so needed to drill down further. Again, from a Treasury perspective, now this was very interesting because it showed us that in 2014-15, there's still an upward trajectory, but in 2014-15, provisions were about 28 billion. This is around just the National Health Service clinical, looking at clinical and non-clinical negligence claims. So the number of claims are coming down over the period, but the value has increased by over 3-fold. Again, that comes out of current spending, and that's not sustainable. Highlighted a massive issue for us. So the balance sheet review, what they did was really to start looking at and understanding the balance sheet, and they developed this approach. I love lovely, nice, simple approaches because I'm a simple person, and it works for me. Look at assets and liabilities from whether they're core and assess them as to whether they're core or non-core. And then, so for instance, in terms of managing the balance sheet, if an asset was decided to be core, a hospital, or government building with civil servants, public sector workers, then you could think about improving the utilization in terms of the government property strategy, really trying to make sure that the number of buildings used within Whitehall, within government, do we really need as many? Can we think about the ones we don't need, we could sell, and the other ones we could keep? So that was the approach. So the review was launched in 2017. It looked for, it's been increasingly used for microeconomic policy interventions, really sweating the assets, and good data is now available. But please, another piece of advice, good is good enough sometimes. Don't have to wait for perfectionism because we're not there yet. We still have a number of qualifications, and some of them are around boundary issues because we do follow the general government definition. there will always be a difference. So the national accounts are slightly different, obviously, for you, or from an accounting point of view, we look at the definition of control, and they're different. It has led to very interesting discussions as to what is part of public sector, and therefore there's been greater alignment. So it's good to ask the questions and then think, well, what's really right in terms of accountability and transparency? Another big piece of work that happened in 2017 as part of this review, and it led to this report being published, was really to look at the role that intangible assets play in terms of developing and delivering economic value. So one thing that was really identified and acutely came across was that private sector is very good at, given the investment, which is almost about 50% of public sector in assets, is in intangible assets. While private sector will capitalize and recognize about 95%, that figure was only 2% for central government, for the public sector. Huge discrepancy. So we were potentially under-recognizing assets, currently intangible assets. It was only recognizing 35 billion, but actually we could have been recognizing up to 150 billion. Now, yes, we have to strictly follow the definition set out in the standards, but actually what it encouraged us to do is to look beyond the balance sheet. So yes, what we started to do was to look at good practice, and so we looked at across 4 themes: expertise, good practice, valuation reporting, and there were 10 recommendations, and you will see that the cross-cutting one is data. So always data, turn it into insight. Contingent liabilities, another big change was the implementation of and looking at contingent liabilities to carry on the thread. There was lots of other work, but I'm only showcasing this for time purposes, was the fact that contingent liabilities were going up and up and up. So what could we do? So a new framework was introduced, an approval framework, where we looked at sort of what's the rationale? Why do we have contingent liabilities? What's the risk exposure? What kind of return, what's the risk and return? What mitigations are in place? And ultimately affordability. If the risk does materialize, if it goes from possible to probable, then what is it affordable, a bottom line? You can see there's a whole slew of reports at this time. Another key thing, there was a number of big company collapses, and it ended up government was the insurer of last resort. So looking at managing contingent liabilities in the public sector when they're no longer private sector and they fall on the public sector, that's an increasing the risk exposure. So as a result, it led to focused on 3 different areas, looking at transparency, to assess the impact of policies on the balance sheet, both short-term and long-term. So real balance sheet focus, looking at asset management. So what's the impact, for instance, for sales of assets, selling assets on the long-term and the short-term? So are we gaining short-term budgetary gain but actually making long-term losses? So we really brought stuff into focus, so you're not just following the budgetary aim. And this is one of the reasons why having the link, I think, between, doing accrual budgeting is really important. Risk management, again, you can see inflation risk management, but clinical negligence as well. So how do we manage the risk? So the risk format became, instead of the approach, it is further involved into this framework. And it analyzed framework in 3 different portfolios: a policy portfolio, financial portfolio, and a commercial portfolio. And at the bottom of the screen, you can actually see how that's been quantified in terms of properties, etc. So where next for the government balance sheet? Well, in short, quite a lot. Forgive the screen, it's rather small, I do appreciate that, but let's just highlight a couple of areas, I would say. Firstly, that there's further work. I think this is brilliant, that we're really looking at forecasting the government balance sheet and working, the OBR and the ONS are working together to really, with Treasury, to think about the impact and future, look at policy decisions and then project forward, what's the impact of that going to be on the government balance sheet? I think that's really, really good in terms of really being able to see what's actually going to happen. And we talk about contingent liabilities. We talked about clinical negligence. Now, bringing that all together, this is where it's had a real-world difference. We're focusing now on improving safety, maternity safety pilots. Why are we doing that? We identify most of the clinical negligence claims, and why the numbers were going up was because it was mostly to do with poor obstetric care. So during the birth process, sometimes, there was lots of, there were issues. Whereas as long as there's a moral case as well for it to really make sure that there should be better obstetric care, there is a financial case as well that most of these children, unfortunately, will need a lot of long-term care, which is very expensive. But also, if we could do something to make things better for everyone, so that's why. So this is a really clear example of where we can see how looking at the government balance sheet, looking at the trends, has identified issues in policy, and it's made a real change to government policy and thinking about how do we manage the risk, what could we do. So a lot's been going on, and so I'll leave you with a few key takeaways. What are our lessons? I would say engagement. Engage with your audience and find out what's going on and trying to communicate, understand what information you can communicate, what you have already. Think about how you communicate that information, the presentation of it. Is it accessible? Are there just lots of numbers? Turn that data, all those raw numbers, into insight. That's where finance professional really comes in, to really help the decision makers and identify trends. I think finally I would say, when I say engagement, we were very fortunate that the Chancellor of the Exchequer really took an interest in this, and there's a huge momentum behind it. I would encourage you as well. Your leadership, the finance leadership, the political leadership needs to be there. So thank you very much, and I'll share. Thank you very much to the speakers. Thank you.
Well, actually, it's 5 a.m. in the UK, where Principal Consultant Menji Collar is. I would like to extend my gratitude to the Principal Consultant Menji Collar for your participation. We will now invite Professor Sympoium to share the case of New Zealand. The Professor Sympoium is working as an associate professor in accounting at Victoria University of Wellington and is also a chartered accountant in Australia and New Zealand. She is a management committee member in New Zealand Quantitative Accounting Research Network, editorial board member and an editor at Accounting and Finance, and an assistant editor in the Accounting and Finance and Account Research Journal. Professor Sympoium, now the floor is yours.
Okay, good afternoon, everyone. I'm from New Zealand, from Wellington, New Zealand. Thank you so much for the opportunities for me to present the New Zealand case in this symposium. So today's my presentation is to focus on the role of accrual accounting information in fiscal risk identification and assets and liability management. It's from the study from New Zealand. Okay, so you can see that the New Zealand Public Financial Management actually traced back to the Public Finance Act in 1989. So you can see the purpose of the New Zealand Public Financial Management is to help the government of the day translate strategies into actions. They want to focus spending on the outcomes sorted by the government, promote informed decision-making and accountability, identify and actively manage fiscal and non-fiscal risks, and encourage a responsive, prudent, efficient, and effective state sector. But you can see that these have to be achieved through a very thorough planning, decision-making, and the scrutiny process from budgeting, financial reporting, review, and feedback and incentive to manage efficiently. I think one of the unique characteristic of the New Zealand Public Financial Management System is actually the integrated use of the accrual accounting throughout the whole system, from the principle of responsible fiscal management contained in the Public Finance Act 1989 to the development of budget strategies and policy, budget execution and monitoring, interim monthly and annual financial reporting, and the audit review and the feedback process. And the other key characteristic is actually in New Zealand, we use independently established the financial reporting standards based on the international public sector accounting standards. Okay, so just a little bit of the overview, but you can see that in the New Zealand system, we have the government-wide report, but down at the level, we got government departments. They also have specific report. In all of them, you can see that they apply the accrual accounting, but you can see that here they're going all the way from the long-term fiscal report to the budget system, and they're going down to the estimate of appropriation, impress supply, supplementary estimates to the monthly financial statement. I'm going over it a little bit later regarding the monthly financial statement, and go toward the Crown annual financial statement, and then go back to, and you can see in the inner circle, it's about the process for the department specific report will be, apply accrual accounting consistently. So you can see that in New Zealand, the current implementation status is actually going all the way from fiscal policy and budgeting to financial reporting and strategies and plans. So you can see that, from fiscal policy and budgeting, we got the well-being budgets and the economic and fiscal updates. We've got three-type, annual, half-year, and the pre-elections. And the financial reporting, beside the audited annual financial statement, the New Zealand Treasuries produce the unaudited monthly financial statement all the way. So they actually, you can see the performance, going toward the annual performance, and the treasury and plans, including the investment statements, probably every 4 years, and the long-term fiscal position statements. And from this year, they actually now introduced the long-term inside briefing, and from next year onwards, we're going to have the well-being reports. So just a little bit quickly, just to show that how accrual accounting has been used consistently all the way through from the budgeting process to the review process. You can see in the well-being budgets, I just did a few diagram for you to see that how how they're using the actually accrual accounting. So they provide the net worth as a percentage of GDP in the most recent well-being budget 2021. So together during the time of the budget, we have the budget economic and fiscal updates 2021. They released at the same time with the budget document. We also have the half-yearly and also the pre-election ones every 3 years as well. So you can see that accrual accounting is actually the key, has been applied consistently all the way through. And we have the interim financial statement, with the monthly statement, for example, the year going toward, at the time that we prepare the reports, we have the 11th month end to the 31st May 2021. So every month, the Treasury actually prepare the monthly financial statement to update on the performance toward the financial, the end of the financial year. And the financial statement of the New Zealand government, for example, it's a quick example here. And regarding the review process, one of the key things that in New Zealand, we have the investment statement. So pretty much every 4 years that the Treasury prepare the document in order to help the government to actually look back to see that how they have achieved and manage their assets and liability in order to how they can achieve their targets, and to make sure that they actually can deliver the service and to work the living Senate framework for the New Zealand citizens, for example. So, for example, in the investment statement, they're doing the analysis of the changing composition of the government balance sheet. For example, you can see that the financial assets proportion has been catch up with the proportion of the property, plant, and equipment, tangible assets over the years to the 2021. And the most recent one that's released in September is a long-term fiscal position statement and the long-term inside briefing. And you can see that, you know, they provide the fiscal projections of the, for example, the historical trend scenario as a percent of GDP. And you can see that the key element is actually based on a core accounting element. Like, for example, they put on like, you know, revenue, operating balance, net debt, net worth, for example. Okay, so now I actually move to a bit like, it's just a little bit introductions. And now I move on to a little bit more the characteristic of the way that the New Zealand financial statement, they classify in their balance sheet. So you can see that the way that we want to achieve to manage the, as I can say, balance sheet management, the New Zealand government like divide their balance sheet into 3 functional classification, including social, financial, and commercial. So you can see that the social one that it actually they classify as assets and liabilities held to provide public services. And these include, for instance, like road, school, and the national parks. And you can see that for the purpose of that particular statement, the social asset is also include the tax receivable and student loan managed by the Inland Revenue Department, IRD, and the Crown-owned company that do not have a purely commercial objective, that is a Crown Research Institute. And they also have the financial classification will be the assets and liability that finance or pre-fund the government expenditure and obligation for future expenditure. So, for example, they consist of Crown financial institutions, the Reserve Bank of New Zealand, the government borrowing via the Treasury New Zealand Debt Management Office. And then also the third category is a commercial category, will be the assets and liability of entities with commercial objectives. The company are largely independent entity operating in the competitive environment. And you can see this category comprise the commercial priority company and listed company. So, and also that in the, the Bayfru, I can say, budget, economic and forecast updates, they identify the key fiscal risk to the financial statement. So they classify into 5 separate risks. The first one will be the fundamentally uncertain events. Like, for example, like COVID-19 event, and be a good example of the fundamentally uncertain event. And the second category will be the deviation from key assumption and adjustment, like, for example, any changes in nominal GDP. So how does it actually have an impact on the fiscal forecast? The third category, the contingent liability and assets. So you can see the potential cost or income to the Crown that depend on whether the particular event occurred. And the fourth one is the policy changes. And the fifth one is the cost pressures and the variance associated with existing policies. So this one, I'm not actually going all over slide regarding the time constraint, but you can see that this one is like, for example, reflect to the first particular fundamental, like one good example for the uncertain event, like it will be the COVID-19 impact. So in the financial statement that, they actually doing the analysis to see that what is the impact on the economy for the COVID-19 pandemics and how the government respond to the pandemics and the government role in recovery and managing any future outbreaks, and also the impact on the valuation of the assets liability and contingent liability due to that particular event. So it's quite important to actually identify the impacts on the balance sheet. So the balance sheet risk, it's how the New Zealand government define that. They say the risk that assets and liability will not be able to provide public services, finance or pre-fund future government expenditure and obligations, or achieve commercial objectives. So you can see that they can actually relate the risk to 3 separate categories: social, financial, and commercial. And you can see that, when we actually estimate the risk, we're going down to the fact that we actually measure the level of resilience. So the ability to absorb and adapt to the shocks and stresses that might otherwise hinder the achievement of the objectives of the government. So you can see that, for example, like with the social balance sheet risk, so it will be, the source of social balance sheet risk to the public services For example, like, the first one can be physical assets such as land and building, state highways. So you can see they can be susceptible to external natural hazards and the quality of asset management in delivering the service. And the second one can be the replacement cost of the physical assets. They are subject to valuation movement, to the changes in the property market conditions, changes in demand, and the changes in the cost of constructions. And you can see that the social insurance and retirement liability, like in New Zealand, we have including the accident compensation, the veteran disability government and the government superannuation fund, for example, are prone to volatility through the actuarial valuations. Also, the fourth one will be the concessionary lendings, including student loan and the small business cash flow scheme coming from the COVID-19, one of the response of the government to the COVID-19 pandemics. So you can also expose to like counterparty risk and risk associated with changes in the assumption about the future value of money, affected how the future repayment are discounted. And the last one is the contingent liabilities, including indemnities of activities of public interest, environmental claims, and legal proceedings. So, and the financial balance sheet risk will be, you can see that one of the things that in New Zealand, like during one of the response to the COVID-19 pandemics, that the government actually, I can say the Reserve Bank of New Zealand, exercised the large-scale assets purchase program. So this actually exposed the government to significant interest rate risk. And you can see the financial assets, for example, held by, department like the Accident Compensation Corporations and the New Zealand Superannuation Funds are exposed to interest rate risk, exchange rate risk, and equity and bond market volatility. And also you can see the liquidity risk related to the government's ability to raise the cash to meet its financial obligations. So, and the last one is the commercial balance sheet risk. You can see that, the source of the risk will be coming from the changes in customer demand for products and services. Like, for example, one of the good example will be, for example, like in New Zealand is one of the good example for it. You can see that, for example, during the COVID-19 pandemic, so you can see that the customer demand to use a service, so it will be much lower compared to the normal time. And the availability of the price of business inputs to provide products and services. You can see the third one will be the changes in the competitive landscape led by the new technologies, new market entrants, external generated shocks and trends, So, and now once we, identify the risk, we actually come down to what will be the good balance sheet management. So the way we define a good balance sheet management will be, we have to make sure that we own the right assets and we manage them well, and we have to manage the risk efficiently. We want to have the sustainable financing, strong system, and the benefits of, the good balance sheet management will be improved well-being through ensuring the public service to deliver the more efficient use of assets and liability releasing the resource for other use, and allowing the equitable distribution of costs and benefit for public services across generations, and supporting fiscal sustainability and resilience to improve well-being and economic growth. And you can see that I'm just going over quickly to see that how they divide the social assets and liabilities, financial assets and liability, commercial assets and liabilities. And you can see they're looking at the balance sheet risk assessment across. So one of the key things that, in the investment statement, like every 4 years, the New Zealand government actually exercise a resilience test. So they want to see that, they actually pretend they have an event and see how the impact. So they're looking at the impact, for example, on the nominal GDP, impact on the, operating balance before gain and losses in New Zealand, and to see how the impact on the net core crown debts. And I think then the last bit that I want to focus on two key things that is quite interesting that in New Zealand that we using the investor confidence rating, that in a way that we, what is ICR, that is a cabinet approval approach for assessing agency investment performance. So, and thus the level of confidence of stakeholders should place in the ability of the agency or the government departments to manage the assets and investment well. So you can see that they actually managed by the Treasury on the 3-year cycle, and they can be expressed from the range of A to E for very low confidence. But you can see in general, they expect that, most of the department have to achieve at least a B rating over time. So, for example, you can see the ACI using 9 elements to assess performance. So they're using 55% based on the lead indicators and 45% based on the lag indicators. And you can see here's a quick summary about, how they actually rank, like the result in 2021. So regarding how the key department is ranked, like rating, given on how they manage their assets based on the investor confidence ratings, they are given to each department. And the last bit that I want to it's about capital charges. So you can see that capital charges is actually designed to ensure that the cost of capital are included in the cost of services, and to require that they are reported elsewhere could effectively, thwart their purpose. And you can see that the capital charge is actually recognized in an expense when the entities are reporting to the Treasury. But you can see that, when the departments and the entity is actually consolidated in the whole government account, this particular expense actually has been eliminated during the consolidation process. So you don't actually see that in the whole government account, but for the departmental account at the department's level, you see the charges. And this one is one of the most recent data that I can have at 2019 regarding the estimated annual capital charge expense for key departments. Like, for example, Ministry of Education, that is about 886 million, for example, regarding capital charge. And you can see that for Defence Force, it's 358 million. And you can see that, the last bit is one of the key things, that when the Treasury prepare the investment statement, they also prepare the case study for each particular key department. So, for example, they, give an overview, like, for example, accident, like compensation corporations, the healthcare sector, Housing New Zealand corporations, and New Zealand Debt Management Office. And you can see that the last bit will be the potential difficulty in assets and liability measurement. New Zealand, you can see that, of course, that in the way that, we measure our assets and liability, there are a certain area that we actually experience the potential difficulty in the measurement. Like, for example, the assets can be the personal and corporate tax receivable, property, plant and equipment, financial assets. And on the liability side for the New Zealand government will be the borrowing, especially the large-scale asset purchase program, insurance liability, superannuation liability, the veteran disability entitlement liabilities, entitlement under the Holiday Acts 2003, for example, and the contingent liabilities. And my last bit for me will be, here's a summary of the degree of usage of accrual accounting information in New Zealand. So you can see that the accrual accounting has been applied from the production through the analysis, through the usage, and also have an impact that they actually use the information in order to make decisions, timely decisions at the government and also at the department interim level as well. So thank you so much for listening to my presentations. And I'm sorry a little bit, for a bit running out of time. But if you have any questions, just feel free to raise during the panel discussion session. Thank you.
Thank you very much for walking us through many interesting schemes for managing assets and liabilities, such as New Zealand's investment report and long-term statement of financial position. Now we have Canada case presentation presented by Brian Pagan, President of Capital Perspectives. Until he retired as Assistant Secretary of Expenditure Management, Treasury Board of Canada Secretariat in 2019, Brian Pagan has worked on major government finance tasks, including policy development, budget and expenditure management processes, and performance measurement. Now he's the CEO of Capital Perspective, which focuses on executive development, strategic planning, program performance, and financial advisory services. Please welcome Brian Pagan.
Yes. Good morning, good afternoon, good evening, and thank you very much for the invitation and the opportunity to share with you the the experience in the Government of Canada in our voyage to a full accrual framework for our budgeting and management of public finances. I will. It's a, as we know, it's a very complex and somewhat technical area, and very difficult to do justice in just 15 minutes. But in the time I have available, I want to introduce the context for the decision to move to accrual accounting, and then touch on some highlights in terms of how we use accrual to develop our budget and manage risk, how it has resulted in better management of assets and liabilities. I will walk you through the actual changes that this has had in our decision-making process and governance, and then close with some critical success factors. And just the starting point for our journey to accrual accounting began with a New York Times front page story in 1995 that suggested that Canadian public finances had become unsustainable and that we were at risk of an intervention from the International Monetary Fund. This front page news came on the heels of successive governments, liberal and conservative, who continually missed budget targets and made decisions that were very short-sighted or short-term in nature, without a full understanding of the impacts that they would have on the long-term finances. And so there was a commitment made in 1995. It takes a while to put in place the processes, the systems, the staff, and so the first accrual budget was presented in 2003, and from that time it has served as a turning point and a path towards much more sustainable and much more disciplined budget and management processes. I will point out that our budget and our financial statements through the public accounts are on a full accrual basis, consistent with Public Sector Accounting Standard Board guidelines, and as audited by our Office of the Auditor General. The accrual basis allows for better information, analysis, planning, identification of risks. But the actual control of in-year expenditures, the program expenditures of departments, are on a cash basis. The environment in which we work is typically complex, with three different departments: the Department of Finance, the Treasury Board Secretariat, and the Receiver General, all involved in the process, the creation and management and sharing of data and information. Finance leads on fiscal policy and the budget. The President of the Treasury Board leads on the development of accounting policy, direction, and preparation of the financial statements. And the Receiver General is the banker for the Government of Canada that actually transacts the revenue and expenditure transactions of the government. All told, it's very specialized. In the Department of Finance, you have approximately 80 people in a department of some 1,500 that run the budget process. In the Office of the Comptroller General, you have about 20 people that run the actual accounting and preparation of financial statements for the government. And the Receiver General, there's another 100 or so people actually running the banking operations. So those are the staff at the center of our our process. The actual management of this in departments is facilitated by more than 5,000 financial officers spread across 140 or so departments and agencies. So quite quickly, turning to the budget. I mentioned the watershed moment in 1995, and the budget has been on an accrual basis since 2003. The key here is that risk is managed through the budget process by using accrual information on a consolidated basis. So it's not just parts of the department, it is consolidated for the Government of Canada, including Crown corporations. So you can imagine we have the ability to lift up the hood and peer into risks related to the management of nuclear reactors, agriculture, our borders, the transportation system, etc. These program decisions are supported by budget documents that now include an accrual profile and also the identification of the accrual profile on the fiscal framework, whether it's going to be a net positive or negative to the overall budgetary balance. The introduction of accrual accounting has facilitated a better understanding of aggregate budget measures, including the budgetary balance as a percentage of GDP. This was approaching 70% back in the 90s. As a result of improved discipline and better budget planning, there was a steady downward trend right through till 2015-16, below 30%. And now, of course, because of COVID, expenses are increasing, creeping back up to 50%. But the introduction of accrual facilitates longer-term horizons, and there are long-term fiscal sustainability reports that go out 30 and 50 years that show that the COVID measures, as temporary measures, will disappear and will be back down to a negative slope. The most direct impact for departments is clearly on the management of assets and liabilities. And these are reflected in the public accounts and financial statements that are tabled in our Parliament 6 months after the close of the fiscal year. All assets and liabilities are reported in the balance sheet, except some intangible assets, natural resources, and Crown lands that have not been purchased. The introduction of accrual concepts and better information has improved the transparency of government assets. There are data sets now that can be broken up by department that show all of the physical assets of the department. There is information on our Canada Pension Plan Investment Board, which runs the Canada Pension Plan. And so they use accrual information and demographic information to show the long-term needs and projected costs of pensions, and then invest accordingly to reflect those longer-term costs. The key here in terms of usage and impacted decision making is that it's not sufficient to introduce a policy or accounting direction. You actually have to change your governance and your decision making processes to align with that policy direction. And so we've seen this in Canada, both in the bureaucracy, the way in which staff develop information and the tools that they need to manipulate that information in the information systems. We've seen that at our executive level, the cabinet, who now require additional financial information, tables, and long-term projections to understand the impact of the decisions that they're making. And then we've seen this in our parliament. As I said, it has supported improved transparency, and so parliamentarians are now able to go beyond the numbers and look at specific physical assets. They might be interested in a bridge in this province or in a military base in this area, and all of the assets and liabilities are laid out in the documents presented to Parliament. In terms of critical success factors on our journey, and I emphasize that it is a journey, introducing technical concepts in a very complex operating environment takes time. And so you need to, as I said, you need to adjust your governance and your decision-making processes and tools to support that policy direction. You need to work very hard at identifying the skill set and the training in the information systems to manage and manipulate your data. And you need to engage in an ongoing effort at communication and education to parliamentarians and decision makers. So to wrap up, this is an iterative process, and as with New Zealand, we've shown, I think, the resiliency of the accrual concept just recently. As a result of COVID, we've gone from a budgetary deficit of $39 billion in 2019 to a deficit of $359 billion in 2020, a factor of 10. We were able to sustain that dramatic increase in financial costs because of the use of accrual and our ability to discern short-term from long-term impacts. So we'll leave it there, and I do look forward to your questions. Thank you.
Thank you for your presentation, President Brian Pagan of Capital Perspectives. I believe it is 2 a.m. in Canada. Thanks for being here despite the fact that it's very early in the morning. Now let's turn to last presentation, the current realization of accrual information in France. This will be presented by the Senior Project Manager, Fabien Collignon of CNOCP. Senior Manager Fabien Collignon has experience of working at an accounting firm in the French financial markets authority. Based on this experience, she is currently working as a senior manager for CNOCP and also a member of CAG, an advisor group within the IPSSB. Ms. Fabien Collignon, now the floor is yours.
Thank you. Good morning, good afternoon to all. I assume you're hearing me well. First of all, I would like to thank the KIPF for inviting me and providing the opportunity to present the state of play of the management of public sector assets and liabilities in France. I am Fabienne Collignon, member of the IPSSB Consultative Advisory Group and Senior Project Manager at the French Standard Setter for the public sector. Now, I assume you can see the slide. I hope I'll be able to scroll them down. The objective of this presentation is first to provide insight in the organization of two large parts of the public sector in France, the central government and the social security sector. Then it is meant to show how this organization drives the financial reporting efforts and eventually to what extent financial reporting is actually useful to users. So trying to scroll the next slide. This diagram is set to show that the government controls both, there we go, that's very sensitive. Sorry about that. Hopefully nothing will change now. This diagram is set to show that the government controls both public and private sector entities. At the moment, only separate financial statements are established. This is because consolidated reporting is not considered useful given that national accounts provide for a macroeconomic viewpoint. That being said, the central government separate financial statements cover all ministries and parliament. In other words, ministries are not reporting entities in their own right, and the central government separate financial statements are considered a form of grouping. Next slide. If it's my mouse or whatever, sorry about that. It's either very slow or okay. That's that one. Next. Come on. I'm very sorry about that. Okay, so that should be fine. A bit of background on those central government's financial statements. They were first presented in accordance with local generally accepted accounting principles in 2006, and have also been audited since then. Implementing accrual accounting had and still has a very positive effect on the management of assets. Assets are now fully inventoried, which allows for an efficient follow-up of subsequent expenditures. That in turn helps with budgeting, still on a yearly basis though. On the liabilities front, implementing accrual accounting had the merit to account more comprehensively for liabilities, both financial and non-financial. It also led to track contingent liabilities. However, reporting controlled entities only integrate financial statements through the equity method impairs a thorough management of those controlled entities' liabilities. Next slide. Page 5, there we go. Hopefully that will stay there. How did those efforts to go accrual progress over the last 10 years of implementation? The Court of Auditors have issued unqualified opinions since 2006, even though accompanied by emphasis of matter that cast light on possible improvements. From 13 emphasis of matter in 2006, 4 topics now remain under scrutiny, and they relate more to IT issues than to the correct application of local accounting principles. Setting aside the audit opinions, is financial reporting really used? We actually regret that accrual reporting still lacks support from parliamentarians. Parliamentarians are indeed more attracted to the budgetary side of public finances, especially because they vote on the budget. And it is clear to them that the wealth of efforts and resources put into presenting financial statements does not help cutting expenses in the short term. So this is a perfect transition to the next slide, if I can go to page 6. So you'll see there that indeed the budget is at the center of public finance management. Budgetary rules set expenditure authorization and control limits in order to manage appropriations. This is also a reason why budget is more focused on cash inflows and outflows in the period than it is on longer term expenses. And obviously, this is a different perspective from that of accrual accounting principles. So now, having explained the context of public finance management in France, where does this leave us in terms of how financial statements are used? Actually, focuses on some critical elements of financial statements. Take, for instance, non-financial liabilities. This is probably currently the main usage of the financial statements, even though limited to the specific elements of the left side of the balance sheet. While these non-financial liabilities are followed up closely and thoroughly managed on a ministry per ministry basis, which is considered very useful on an operational level. And I believe this echoes presentations from other countries as well. Some other financial statements are reconciled with budgetary information on the one hand and with statistics on the other hand. We have some examples of reconciliations and breakdowns in the presentation on the next slides, 7 to 9. If I go to page 7 now. There we go. So this is an example of reconciliation to the budget, and it shows a reconciliation between the accrual accounting net result and the budget result. For instance, reconciled items comprise budgetary expenditures that are balance sheet elements under accrual accounting principles, namely acquisitions of assets. I go to the next example on page 8. I've inserted here a comparison between the accrual accounting liability for the central government and the equivalent under national accounting principles. The difference here relates partly to the scope of entities that are taken into account, and we can see once again one adverse effect of the absence of consolidated financial statements for the central government. Finally, on page 9, there we go. The diagram features a breakdown of unrecognized budgetary future expenses, labeled commitments. Those amounts are set to cover future expenditures for the development or the maintenance of asset infrastructure and should partly translate into future assets in the financial statements. I'm going to cite those quickly on those last slides in order to save time, but I gladly take questions afterwards. So now turning to the social security sector. So in what the social security sector is different from the central government. So this diagram shows that the social security sector in France is organized in a very complex way, with groups of entities dealing with pensions, with health expenses, with children benefits, etc. Several financial statements of those entities that belong to a group are combined. Other than that, and absent a parent entity, no consolidated financial statements are established. And I realize I'm anticipating a bit on page 12 here. Page 11, some more explanations. There we go. To make things even more complex, a finance law specific to the social security sector is voted on every year. And because the finance law for the central government and the finance law for the social security sector are voted on separately, the social security sector is not, politically speaking, considered controlled by the central government. And another important difference with the central government is that of the budget prepared on an accrual basis in the social security sector. Additionally, the budget does not serve the same control, cash limit, purposes for the central government. And in case of departure from the budget forecast, expenditures are not capped like in the central, as in the central government, but corrective measures will be taken. So page 12, which I anticipated on earlier. Essentially, what I said earlier about the difficulties that the social security sector faces in terms of the groupings of accounts, be they in the form of consolidated or combined accounts. In a nutshell, in the social security sector, existing yet incomplete combined financial statements, as well as separate financial statements, form the basis for public finance management. In addition, they are audited either by the Court of Auditors or by private audit firms. To conclude on the use, To conclude on the use of financial statements for assets and liabilities management, it appears that financial statements serve well the objectives of well-inventoried assets and well-managed liabilities. Also, I'd like to emphasize how difficult it is to get a comprehensive picture of the organization of the public sector and its various components, even more so when financial information sits in numerous places. The South Korean project was the opportunity for us to get a better understanding of how assets and liabilities are currently managed, but also to assess the gap that we still have to fill to ensure high-quality financial information and to facilitate the identification and the management of fiscal risks. And this gets back, if I recall correctly, to Thomas Müller-Marxberger's comment yesterday that assets and liabilities management is tightly linked to fiscal risks management. Finally, I would like to wholeheartedly thank you for your time and attention. With that, I stop sharing my screen and will pass over to you.
Thank you so much. The France currently is around 6 a.m. It's probably over 7 a.m. Thank you so much for presenting at such an early hour. Thank you very much. So I would like to thank all the presenters who presented on the case studies of each country. We would like to take a 5-minute break, and I would like to commence panel discussion after the break.
Now we will begin the discussion on the asset and liability management with accrual information. The discussion today is chaired by Professor Park Sung-hwan in accounting at Hanbat National University. He served as an advisory member at Korea Accounting Institute and Public Finance Statistics Advisory Committee. And the president of Korea Association of Business Education is actively conducting research on national accounting with the center. Professor Park, now the floor is yours.
Ladies and gentlemen, I'm very pleased to be the chair of this symposium, and we would like to listen to the case studies of major countries on asset and liabilities management. It is a great pleasure that I'm moderating today's panel discussion. So in order to manage assets and liabilities well, especially in the public sector, it is very critical because it will affect the fiscal soundness, and also it will help us secure sustainability, and also it will give benefits for Korean public. I would like to introduce our panelists today. First, we have Mr. Ivor Beasley. He's the Public Management and Budgeting Division OECD's Senior Policy Analyst. Thank you very much. Mr. Thomas Miller, Marcus Berger. He is the Chair of ICSASB KEG. Thank you very much. And now we have Professor Bong-hwan Kim of Graduate School of Public Administration's SNU. Thank you. Also, Professor Bong-hwan Kim served as a moderator yesterday. He's joining us as a discussant today. Also, we have representatives from Ministry of Economy and Finance and Board of Audit and Inspection. Unfortunately, Director Woo Jin-kang of MOF and Director Woo Jam-nam of BAI, Board of Audit and Inspection, had an urgent meetings to attend, so I'd like to ask your understanding. So instead, we have two people who are here with us. We have Deputy Director, Fiscal Management Bureau, Mr. Lee Jae-hak. Thank you very much. And we also have an auditor from Financial Audit Division, BAI, Mr. Choi Sung-hoon. Thank you very much for being with us. The panelists will present their opinions opinions on asset and liability management using accruals information, followed by Q&A on country cases. We received questions in advance, and I'll be asking those questions to the presenters. I would like to ask our panelists to limit their comments within a maximum of 5 minutes due to time constraint. And I would like to apologize for not being able to give you enough time due to time constraints. So we already listened to the presentation of 4 countries. So I'd like to ask you to give ideas about each country's asset and liability management using accrual information, and also can you give some opinions on like consolidating those accounts and also various ideas that you would like to add on. First, I would like to ask Ivor Beasley from OECD, then Chair Thomas Mueller, Marcus Berger, then Professor Kim Bong-hwan, and Deputy Director Lee Jae-hak, and Auditor Choi Sung-hoon.
Thank you very much for the introduction, Professor Park. Another great set of presentations, I think really interesting, all of them covering a huge range of interesting and important issues. When I think about balance sheet management, I think this is one of the most kind of exciting areas in a way in public finance. It's almost as if Accruals has opened up a wealth of new opportunities, and it's like a new, low seam of gold that you can dig a lot out of that's of public value. The balance sheet focus, it's clear, from these examples that it's provided a wealth of useful insights, especially on kind of longer term financing issues and fiscal sustainability. I think this has been, the importance of this has never been more clear than now, where countries which have good balance sheet management have been able to fall back on the balance sheet. The balance sheet has been the key instrument really in dealing with COVID-19. So that's demonstrated the value of a lot of this work, I think. I think there were some very interesting points made, different perspectives. I particularly was interested in New Zealand's focus on balance sheet management from the point of view of delivery of services and its impact on well-being, for example. I think we can also see from the presentations that the focus of balance sheet management differs between countries and may change over time, from sweating assets to managing problems with contingent liabilities, managing long-term cost pressures in the pension system in Canada, for example. I think interesting institutional reforms that this has brought about, and I was very interested by Canada's focus on the role of training and the extent to which you need to make an investment in people and change processes to make all this information really useful and effective, and in information systems as well. So I'd be interested to hear more about that. I had a few, I don't keep this brief, I wanted to put a few questions on the table which were provoked by the presentations. One of this is, to ask people to perhaps explain how government's objectives in balance sheet management have changed over time and why. The second question would be, is government net worth, a useful concept? And, is there perhaps some kind of optimal balance sheet that a government could establish? What type of human resources and skills development do you need to turn balance sheet data into these insights? I think that was a very important point made by Manj Kalar, is developing insights from this information, presenting it in the right way. I also a question about how to engage the interests of parliaments in this, whether countries can share experience on that. And I also had a question in my mind about accounting policies and their impact. Make a huge difference to the balance sheet, whether you choose to value a lot of assets on a historic cost basis, a replacement cost basis, or market value. I didn't hear any discussion of that. So if anybody has something to share on that, I'd be interested. So that's it from me. Thank you very much.
감사합니다. 이어서
So thank you very much. So Ivor Beasley for your kind remarks. I'd like to ask Thomas Müller-Birger to share your opinion.
Yeah, thank you very much. Good morning, good afternoon, good evening, wherever you are. Thank you again, Professor Park, for the opportunity to contribute to this great conference. And I have to say, just echo what Ivor just said, another great set of presentations following yesterday's presentations and discussions. So congratulations to all presenters. I think that has been excellent. I will make some general remarks before I do some comments or make some comments on the aspect of whole of government accounts and the usefulness. And then I have some specific questions to the presenters regarding their studies and their presentations. So first of all, let me say that I agree with the view provided in all reports that the balance sheet management, i.e. the management of assets and liabilities, is essential for an appropriate use of public resources and as a consequence for the achievement of policy objectives. In that regard, I think what I really liked was the statement in the Canadian report where active balance sheet management is the basis for providing more accurate information on the total cost of owning and operating capital equipment for service provision. I think that was really kind of phrasing it very well, what the objective is. In this context, I want to highlight the initial balance sheet review described in the UK report and described by Manj earlier in her presentation, undertaken by the UK Finance Minister in 2017 as a very helpful starting point, which in the end then kind of led to an institutionalized structure which ensures sustainability of the balance sheet reviews and ongoing improvements. And she described it, the balance sheet management team, the contingent liability central capacity, and the Office of Budget Responsibility. And I think the same was described by New Zealand in its presentation. But all presenters also highlighted that it was quite a journey and a long way to go to get there. And I really liked the comment of Manj. I think she was mentioning good is good enough, no perfection is needed. I think that's exactly the recommendation to kind of go along this journey. So what are challenges of asset and liability management from my practical experience? The first challenge, obviously, but all presenters have already kind of gone far beyond this point, but this is what we observe actually in practice at the moment when preparing an appropriate and useful asset management by implementing accruals is the identification, registration, and initial measurement of the assets. However, I think that that's a tactical challenge given the mere amount of assets which can be handled. The main challenge in practice, in my view, and I think it has come out of nearly all presentations in my views, to identify the connectivity between the identified assets and their use of service provision, hence the policy programs. As the New Zealand report describes it very well, the main challenge for government is to have the right assets, not only to have assets, but to have the right assets. In that context, I want to highlight the usefulness of asset classifications as described by New Zealand and the UK in the balance sheet framework, which classifies assets into three different portfolios: policy, social, financial and commercial portfolio, and which with the clear allocation of governance responsibilities and exit strategies. I think that's very helpful. Finally, the usefulness of assets and liability management for better decision making, in my view, is depending on how to measure and provide information on the performance of the assets in contribution to the achievement of policy objectives. According to a 2017 OECD study, if I'm not mistaken, the attention of parliamentarians and media and the use of accrual information by these users is depending on how contextual information is provided to complement the financial information. So in other words, what has been spent by adding non-financial information on what has been achieved with the spending. So only on the basis of this complete picture on assets, users can make an assessment on the efficiency of service provision and the effectiveness of asset and liability management. Is it necessary and useful to use whole of government accounts? That has been a question raised by the presentation of the UK. And let me say in general, asset management should, in my view, should be done on the basis of the financial information of that reporting entity, which on one side is accountable for the use of the assets, and on the other side can make investment and exit decisions. In many cases, an overall or consolidated perspective is not helpful. Misallocations of assets where some entities own too much assets and other entities within the same group reporting entity are lacking these assets are not necessarily detected on the basis of whole of government accounts. So the meaningfulness of consolidated financial statements on a central government level, in my view, depends on the constitutional setting. In federational systems where the federal government does not control state governments and state governments do not control regional or local governments, the contribution of whole of government accounts to proper asset management might be limited, as measures derived on the basis of a whole of government-based balance sheet analysis cannot be enforced on lower level of governments. And furthermore, the accountability sits with those levels of governments where the investment and the finance decisions were made. For centrally organized systems, I agree with the UK view that only a consolidated view is provided by whole of governments can lead to proper management of public resources. So therefore, I think it really depends on what kind of constitutional system we are talking about. So that leads me to my questions, very brief, I hope. One question for the UK. Under the conclusions in the report states that the UK combined the benefits of statistics, GFS, and government financial reporting. I would be interested to know how was this combination exactly achieved? Are there any reconciliation reports prepared to bridge the quickly provided high-level data to the much later presented whole of government accounts providing more granular information? To the New Zealand presenter, one question. According to this study, a good balance sheet management results in a number of benefits. My question would be, are these benefits measured? And if so, how are they measured and reported to the public? And among others, one of the benefits, according to the report, is ensuring the public services are those most valued by New Zealanders. So how are these services which are most valued identified? That would be interesting to me. Regarding Canada, yesterday we talked a lot about contingent liabilities and their impact on fiscal risk. So how are contingent liabilities embedded in the forecast impact procedures as described within the accrual budget preparation? And last but not least, France. As outlined, controlled entities are consolidated on the basis of the equity method, which hinders, in my view, a full overview of assets and liabilities. And I think it has been mentioned by Fabienne as well. Is this kind of acknowledged as an area for improvement, and are there plans to change it? Thank you very much.
Thank you very much for your opinion as well. I would like to move on, and I would like to ask Professor Kim Bong-hwan to share his opinion.
Thank you for the opportunity to discuss in the second KIPF International Symposium. Thank you, Professor Park, and all the presenters for the great presentation. I think managing contingent liability is critical in the value adding in accrual-based management of asset and liability. In that sense, UK case is very interesting to me. I know several questions already asked to Manju. I'm sorry, but I had to ask another questions. I have a couple of questions because, UK established the CRCC, Contingent Liability Central Capability. So regarding CRCC, I understand the CRCC is established by the government investment, but I wonder what kind of a contingent liability are included in its responsibility. Does it include various contingent liabilities such as clinical negligence costs? Second, I also, wondering. I agree that it's good to bring together all the expertise on contingent liability. However, UK already has a National Audit Office and the OBR HMT and the government actuaries department. So you already have so many government, agencies. To me, it seems like the CRCC is another evidence of government tendency to self-grow or expand, also known as Parkinson's law. So I want to hear Manju's opinion on this and what actually brought to UK with the establishment of CRCC. Lastly, you talk about CRCC approve of contingent liability. And I'm just curious, what happens the ULCC doesn't approve contingent liability? Does that mean new project will not obtain approval of budget? I guess there will be a case that contingent liability can occur after the project begins. What happens in that case? Does that project will stop at that point if there is no approval from the CRCC? Those are questions that I want to ask to UK. Now I want to talk about Canada. I think in the report, the government officials who Brian interviewed agree that accrual information is used for budget decision and policy decisions. I think that's great. Unfortunately, I don't think a Korean government official will have the same answer. The cause of this difference might be accrual budgeting. In Canada, you mentioned accrual budgeting started in 2003, which is, I think, pretty early. I don't think we have enough political or social support to adopt accrual budgeting in Korea now, although we adopt accrual-based financial statement. So I wonder how it was possible in Canada in 2003. You mentioned 1995 political commitment and New York Times news. But was it possible because government officials and the politicians had a good understanding of accrual accounting? Did the good understanding of accrual accounting lead to accrual budgeting, or did accrual budgeting lead to good understanding or use of accrual information? And lastly, I would like to ask your advice to introduce accrual budgeting into Korea, because to me, accrual budgeting is the key to use accrual information in managing the asset and liability. And that's all from me. Thank you.
네, 감사합니다.
Thank you very much, Professor Kim. I'd like to move on and ask Deputy Director Lee Jae-hak to share his opinion.
네, 안녕하십니까. 저는 기획재정부의
Hello, I'm Lee Jae-hak from Fiscal Management Bureau, Ministry of Economy and Finance. Thank you so much for inviting me to this important symposium. We heard from four presentations the good examples of how accrual information is used in asset and liability management. And this reminded me once again to think about the asset and liability management using accrual accounting. There are non-financial transactions, and those that are not intangible in the sense of transactions. Those can be recognized through accrual accounting. And by listening to the case studies done by the countries, I was able to learn out of leading principles. In Korea, we adopted accrual accounting in 2009. And as Han shared in the morning, in the early part of today's forum, she mentioned that accrual accounting help us understand the whole picture. So in 2015, the public servant pension has been has been the policy has been renovated, and since then we were able to secure soundness of our public finance. So I'd like to first share my opinions about asset and liability management using accrual information. It appears that each country manages its assets and liabilities in various ways using the accrual-based financial information. And I think it was very interesting that the governments are adopting various approaches. And also, it is impressive that on top of national settlement accounts, the governments are preparing an analysis report on asset and liabilities and manage financial risks based on them. Also, I would like to say that it was also impressive that UK tried to systematically manage assets and liabilities by classifying them as portfolios. And also for New Zealand, I think it provides various levels of analysis on financial management, including investment reports, welfare budget, long-term financial position statement. I think that really stood out to me. Then, what kind of assets and liabilities should be analyzed in terms of accrual accounting in order for it to give us a lot of benefits? So I thought about that. In UK, so I read a report written by BAI on UK. So there are like foreign exchange risks and various risks involved with financial liabilities and contingent liabilities. Those are not seen at the moment, but they have potential to put pressure on public finance. Those are the liabilities that need to be managed. In that sense, CCLC in UK gave a lot of insight to me. Also, it wasn't mentioned in today's presentation. So there are some assets that are related to overseas development. And I think it wasn't covered today, but it would also have risk on public sector finance. And it could be also another liability item that needs to be managed. I think one of the key part of today's presentation was WGA. In US, the whole government account. Korea also, the whole government account in Korea that could cover the whole central government, local government, and public corporations would be useful. In Korea, there are a lot of projects that central government and local governments work together in many projects. So in that sense, introducing WGA system in Korea would be useful. So in that sense, I would like to ask Ms. Menj, it seems like a lot of problems needs to be resolved in order to adopt WGA in Korea. There are staff involved, there are time involved in order to introduce WGA system to Korea. So the WGA report was published after 1 year. The fiscal year 2018 to 2019 report was published only after 1 year. So there was a time gap. So I'd like to understand how the timeliness is improved. How can the timeliness could be improved because of that time gap? And also, so in Korea, we are heading toward devolution, but if we adopt WGA, which integrates local government finance as well, it could be criticized as anti-financial devolution. So the local governments have the authority to control the assets and liabilities. And so in Korean context, would WGA have a merit? So that is another food for thought. Today, I listened to a lot of cases and seems like making this process efficient by the publishing the reports for consolidated manner and also separate manner, and I would like to take it into account in our policy making as well. Thank you so much for your presentation. I'd like to ask Auditor Choi Sung-hoon to continue to share your opinion.
I am the auditor Choi Sung-hoon. And when I prepared this seminar, there were a lot of efforts from the organizer, the presenters, and I would like to extend my gratitude to all of the people who made the symposium possible. The BAI is carrying out the audit on the financial statements of the government. We are checking basically it is appropriately prepared in accordance with the principles. Well, accrual information was adopted about 10 years ago, and we have been maintaining this accrual systems, and there was a lot of expenses and human resources required to adopt and fully implement accrual information. However, there was a concerned question regarding the effectiveness of the accrual accounting. So I believe it is very timely for the KIPF to prepare the symposium under the theme of the accrual accounting in the fiscal management. And I would like to leave some comments regarding the presentations. And well, actually, BAI, as I told you before, is carrying out the audits on the government financial statements, and I would like to share some of the issues that we found. For the asset, in terms of, from the perspective of full and efficient utilization of the asset, I learned a great lesson from the UK. So UK is basically categorizing the assets between the core and non-core, and they are making decisions based on these categories. And they decide how to manage those assets based on these categories. So I found it very interesting. And I have one question regarding this matter. There are core and non-core assets. And do you have any clear criteria to categorize the assets into core and non-core? And in order to improve the revenue or the utilization of the assets, if they are categorized into the core assets, can you briefly share some cases in order to, when you use this category in order to enhance the fiscal management effectiveness? And for the liabilities, I would like to mention the two. For Korea, well, actually, interest rates are increasing slightly. So there was a great concern regarding the national debt. Against this backdrop, there is a great concern and interest in the overall or total value of the national debt. However, from our perspective, we would like to know what kind of activities that are contributing to increase in the national debt. I think we need analysis to find out the answer. So I believe that when I refer to the case of the New Zealand, I believe there is a scheme that we can follow and adopt to get some useful information to manage liabilities. So if we like to adopt this scheme in the Korean policy, what kind of activities are causing the liabilities? Or how much the expenses will occur? I believe these kind of information can be learned from this analysis or the scheme. And this will be very useful information for the people who have an interest in the financial management, including the National Assembly. Lastly, for the liabilities, people mention about the integrated or consolidated financial statements. In fact, in Korea, there are some government projects, but some sub or public organizations are carrying out this project on behalf of the government. And one of the method of funding is issuance of the bond. So it means that if they are issuing to carry out the government projects, they tend to undermine the national debt. So that is one issue. And also, typically, the interest rate is lower than the funding rate. So it can cause the opportunity loss. So in terms of the preparing the financial statements or integrated financial statements encompassing the central government entities, well, actually, this is kind of meaningful to the Korean policy and environment. The BAI is trying to advance this accrual accounting system. In order to do that, we have to check the acceptance level of the people who have an interest in the financial risk. I think many presenters said that it takes some time to fully adopt accrual accounting, and we have to align the interest and the policies or the governance. In particular, well, actually, I heard the case of Canada, and as Professor Kim pointed out, I would like to ask what kind of problems or issues that you experienced and how you overcame those issues when during the process of implementing accrual accounting. I think that is it for me.
Thank you very much, Mr. Che. I would like to thank all the discussants. I cannot summarize everyone's speech due to the time constraint, but I think every discussant mentioned that using accrual information in assets and liability management, it will improve the soundness of a country's financial status and the soundness, and also improve resilience of the country in time of crisis. I think all the discussants mentioned that in their opinions. And also regarding WGA, many discussants mentioned that it is positive. However, in terms of law, regulation, and institutional restrictions could play as another factor. So even a country adopts WGA system, central government may not have the power to control the local governments or the public corporations. Then it may not have, it may not have benefits. So we don't have much time left. So with the time that's remaining with us, I would like to quickly proceed with Q&A. So first of all, I'd like to ask each country some questions and I'd like to ask your response to those questions. My first question goes to UK. The discussants asked various questions, and I cannot throw all the questions to you now. However, I would like to pick two questions for you. So my first question is, UK is running WGA system, and the discussants also mentioned earlier, there was issue of timeliness. And I'd like to understand what are the challenges, including timeliness, that UK face in terms of operating WGA system. The second question is in terms of managing balance sheet. It's a question from Mr. Che, the auditor of Financial Auditor Division of BAI, Korea Board of Audit and Inspection. What is the criteria between core and non-core assets? And was there any practical benefits that UK saw by dividing the assets by core and non-core assets? Thank you very much.
Thank you. to everyone, and thank you for the questions. For those questions I won't get through to, I will submit a formal response. All of the questions, Professor Kim, on the CLCC, I will respond to. But in terms of timeliness, absolutely, it remains a challenge. Because it's such a big undertaking, and I'm pleased Thomas recognises the fact that you have to do the consolidation based on what provides best value, most information to yourself, and according to your own accountability structures. In the UK, it is a very centralised. Central government drives a lot of the decision making through to local government and all the accountabilities. Hence, having everything consolidated in one WGA is really important. But obviously, having that granular information from an entity basis is really important too, because then you can drill down into where the issues are and then try and get some answers to try and find out, well, what's the macro picture, but what's actually driving that? But in terms of timeliness, that's part of the problem. We have to wait for all of the individual accounts to be prepared, to be audited, and then they're consolidated. So we can only go, Treasury can only go as fast as the last entity that submits their data. Now, I was responsible for the consolidation for all of English local government, 483 local government bodies. That's just in England, not Wales, Scotland, and whatever. So bringing them all together, that's really quite hard. And their data doesn't come in until the end of September at the very earliest, and it's later and later. And then you've got different challenges with some entities coming in even after that. The aim was to improve timeliness. Yes, it takes a year. The aim was to move it to 9 months after the year end. And there is a trade-off. The later the data comes in, the less meaningful it is. But government departments are providing monthly data too, so that helps on an ongoing basis. But I agree with you, timeliness remains a challenge. It's got even worse since the pandemic because people are working from home, can't get access to data. It's very difficult to prepare. There are other priorities, and we've been given extensions on preparing the financial information. So, in short, timeliness remains a challenge, and that's what I will say. Like I say, good sometimes is good enough, rather than waiting for perfection. To answer your question about core and non-core, this is going to sound like a wheezy answer, but it depends. It really depends on your local priorities. So, but what it does, what it helps us to do is really focus on which assets were most important in terms of service delivery. Arguably, I say a hospital is, a school building is, you need a core, and then you can start looking at the costs and think, well, actually, do we need this much space in terms of a government building to house so many staff? We did some comparatives with private sector to see how much space did an individual person have as we're moving towards working at home, accelerated by the current pandemic. It made us really evaluate, well, how best are we using our buildings? Do we need as many? And therefore, can we divest them? Is that the best use of government money to be tied into that asset? So that's what, that's having that focus, that distinction to say, okay, what is core to public service delivery? And therefore, what's non-core? Then what are we really getting best use of our assets and liabilities? So, I hope you don't mind that might seem like it depends answer, but it really, each country, and this is what I draw from all of the presenters as well, I learned so much that we think, well, what each country is doing is right for them, and I think there's nothing wrong. No model suits everybody, and really just pick and choose what would be best for you to help you. And it's a journey. We're still on the journey after all these years. So thank you for the questions, and the other questions I will respond to in writing afterwards.
네, 감사합니다. 네.
Thank you so much. Yes, as she mentioned, maybe it is not important to have the clear-cut criteria between core and non-core. As she mentioned, it's better to start now. And also, I'd like to ask the next question to Professor Supwang Trong from New Zealand. It's a question related to welfare budget. Many discussants said it was very impressive. So my question is, so the analysis is based on accrual accounting, and how did the welfare point of view was welfare budgeting based on accrual accounting was feedback on budgeting?
Thank you so much for the questions. I have to admit that sometimes it's very interesting questions, but you can see that in many countries actually are using the cost and benefits approach to justify what assets and liability, what service or they want to deliver, and so what asset and liability they want to hold. So, but for the last 3 years in 2019, New Zealand actually used the well-being approach. So basically, that we actually trying to define the benefit broadly, and once you define the benefits, and then you will see that what kind of assets and liability in place that we need in order to deliver, in order to achieve the targets for those benefits. Let's say that, for example, for the well-being budget in 2021, there's a few objectives regarding well-being that we want to achieve. For example, regarding the just transition, regarding to move the economy to work like climate change, like to be climate change resilient, like to a zero carbon country, for example. And also that we, at the other angle, that we want to focus into the to improve the child well-being, and also that to improve, to prepare the workforce for under the new 4G technological change, for example. So when the way that we have the benefits there, so the government will see what kind of assets they want to put in place. Let's say that, for example, the well-being approach for child well-being, for example. So they know that they need to invest in education. They have to invest to support family, and in order to support provide environment for the children to have the dry, warm housing, and also the access to education and basic needs to make sure that to improve child well-being, for example. And now we'll come back to another question regarding how we report. I have to admit that until now, it's we haven't, the Treasury actually prepare a few reports from time to time. For example, they got the child wellbeing reports, for example, but we haven't actually got the whole report regarding the wellbeing reports. But in fact, recently, they have the amendment to the Public Finance Act. So now in the future, from next year, the New Zealand Treasury, together with the investment statement and the long-term fiscal position, they have to produce the well-being reports as well. So that particular report will reflect on how well the government has achieved in order, what they have outlined in their original budget over the years. So hopefully in the future that we will have some kind of, let's say that a consistent way of we provide the reports in order to reflect back on the budget. So hopefully that I, just trying to clarify to answer the questions, but I'll be happy to put in writing, after the symposium.
네, 감사합니다.
Thank you.
Thank you very much for your answer, Professor Supwang. My next question goes to Canada. So it was a question from Professor Kim as well. I would like to tie those questions and then ask President Brian Pagan. So Professor Kim mentioned that Canada accepted or adopted accrual-basis budgeting and also accrual-based accounting earlier. And now to understand the political climate at that time, how was the political will, how was the political situation at that time. So when adopting after Canada had adopted accrual basis budgeting. However, regarding debt management, it is still using cash basis. I'd like to understand if there are any specific reason behind that.
Well, thank you for the question. First of all, to Professor Kim, your observation about will and which comes first, the skill set or the decision. I think that each environment is different, each circumstance is different. But someone once said, never let a good crisis go to waste. And that is, in fact, the precise situation that Canada found itself in the 90s, where the management of our public finances was approaching, crisis levels. And we had a constellation of political ministers and very capable and ambitious bureaucrats at the time that had a meeting of the minds, and they forged that will. There had been, attempts in previous years to restore discipline and order to public finances, well-intentioned people, but the crisis wasn't there to force the hard decisions. It really was, quite a difficult process. It required not only the adoption of new systems and new skill sets and new, methods and processes, but it also forced very hard decisions about, selling off assets and reducing program expenditures in some areas that were proving to be uneconomic. So it's with that political will that the process of accrual budgeting was introduced, and it was not an easy process. Others have commented on the fact that it is a journey. We have gotten better over the years at understanding the power of accrual and how to use it. And we have gone from having accrual information to actually now having insights. I think it was Ivor was asking about, the difference between information and insights. And a good part of that is more than just having numbers. It's being able to represent numbers and explain numbers in ways that can tell a powerful story. So one of the skill sets that we've developed is right out of the information technology world, and that is the skill set of data visualization, to be able to take numbers and blow them up into bubbles and charts and different powerful ways of introducing some of the concepts. The documents that we present to Parliament tend to be very dry, very technical, but they are supported by something called the GC portal that allows parliamentarians to go in and develop additional information, find additional information in a very data-friendly, very visually friendly way. Now, in answer to the question about, yes, accrual is a powerful tool and it is increasingly used and better understood, but we still manage our debt management process on a cash basis. That speaks to the pros and cons of each system. Accrual is a very powerful tool for information analysis and planning. Cash is a very powerful tool for control. You can only spend the money that is provided to you. And the debt management strategy is the intersection of those two worlds, where the government will plan their fiscal framework, they'll develop a budget, it will result in either a budgetary surplus or a budgetary deficit. And if there are deficits, those debts need to be managed. And so we use accrual and we use the cost of our debt in our budget forecast. It's very much a part of the overall fiscal framework. The cost of our debt is about $22.1 billion. That's servicing a debt that is now in excess of $1 trillion. And the debt management strategy is simply the way in which a very small team in finance manages that basic treasury function to issue government securities, roll those over, and make sure that we always have sufficient cash on hand to pay our bills, to pay public servant salaries, to pay invoices from contracts, and also to pay the holders of our debt issues to pay their regular interest payments on that debt. So it's, as I say, it's a process that's really at the intersection of accrual and cash, but it's a basic treasury function. Leave it there.
Thank you very much for that insightful answer. So I'd like to ask the final question to Fabienne Collignon from France. So this is our question for you. So I'd like to understand what would be the next step to enhance the usage of accrual information in France, and what role would CNOCP would play in that journey?
Thank you for your question. To the questions on improvements in the presentation of controlled entities raised by Thomas earlier, there are talks at the moment in France as to the application of consolidation principles in terms of scope of controlled entities for the central government and for local authorities. Controlled entities are mainly in the private sector, and this is a good illustration of the difficulty I expressed earlier because of scattered information. Actually, controlled private sector entities are presented in the form of combined accounts separately from the central government financial statements. So again, information is there somewhere, but there is room for improvement to regroup information and to communicate more efficiently. And still on that issue, in the social security sector, other forms of aggregation are contemplated, such as combined accounts, because of the way the sector is organized, again, in view of what I said earlier. And in the social security sector, all two entities are not inter-control relationship, and there is no ultimate controlling reporting entity, at least in the current setup. So there's room for improvement there. I also personally strongly believe that we will have to progress on forward-looking financial information at levels of aggregation of accounts that we still have to determine. We would then be able to provide more transparent information on pensions in the long run and on the effects of climate change, as well as on other fiscal risks. And again, that would help with grouping all those information. Again, risk management information is scattered at the moment, and this is a huge area for improvement for us. If only we could convince all parliamentarians that looking forward beyond the early budgetary process is critical, and that they need the financial information to help take sound political decisions. In terms of the CNOCP, I wish we could be proactive in helping progress in shaping sustainability, financial and non-financial information, and providing insight as to why, to what extent consolidation and or regrouping of accounts are important. We are at the early stages of the project to consider providing additional financial and non-financial information, and we're working hard to raise awareness. Thank you very much.
네, 감사합니다. 그 시간이 거의 다 돼서 마무리를 할 시간이 된 것 같습니다. 지금 토론이나 답변 내용 중에서 보면 캐나다의
Covered, and for Canada, adopted accrual accounting, and he mentioned that there was an incident, there was a financial crisis that triggered them to adopt accrual accounting, accrual budgeting, and So we are under the influence of COVID-19. I think we are now in a position to raise awareness among Parliament, among the public sector, that we need to adopt accrual-based budgeting and accounting. Well, some people say that accounting is retrospective. However, contingent liabilities forward-looking. You have to project what hasn't happened yet. So in that sense, accrual accounting would have a huge power in terms of projecting contingent liabilities, for example. And also there are SOEs or infrastructures like managed by the government, and there were a number of opinions shared. And I think we didn't cover U.S. case. However, the federal government of U.S. manages infrastructure, and they have default maintenance cost is materialized and published that number. And also the U.S. Civil Engineering Academy also evaluate SOEs and infrastructures, and they value the number, and also they publish the information, the valuation result on their website. And I think those kind of information could have some insight for us as well. I'd like to thank all the presenters and discussants who are spending time with us until the late in the afternoon. I would like to close our panel discussion here. I would like to thank all the discussants, participant presenters. Thank you so much for being with us. Thank you so much.
I would like to extend my gratitude to all the participants and panelists, including the chairman, Professor Park. And despite the time difference, we have excellent panelists and presenters who are participating in the symposium. And I would like to extend my gratitude to all of you. And we will have the Chief Director Kimani of GAFSC for the concluding or closing remark. Good afternoon. I am Kim Hwan-hee, Chief Director of GAFSC. I would like to extend my gratitude to every participant who is here at the 2-day second KIPF Public Sector Accrual Accounting International Symposium 2021 to grace the occasion with your presence. In particular, I would like to express my deep gratitude to the experts in the public sector from 7 countries who conducted joint research and presented their research results, as well as the experts from Home on the Road who participated in the symposium to share their insights. Above all, I found it very meaningful as we were able to share opinions with experts who are in charge of managing Korea's finances from MOEF, BAI, and KPFIS. At the symposium, a lot of different cases of utilizing accrual information in identifying financial risk and managing assets and liabilities are presented, suggesting various attempts that we can benchmark. From establishing financial risk reports, analyzing risk scenario analysis in the budgeting, disclosing reports on government guarantees, to strengthen liability management based on the transparent accounting system, we were able to see numerous exemplary cases. Furthermore, in terms of assets and liability management, we also learned insights from in-depth analysis of the statement of financial position, analysis of the impact of asset investment to the public every 4 years, and other decision-making process for asset and liability management with accrual-based financial statements, asset and liability management. Thanks to your precious passion and effort, we are able to gather information on the detailed exemplary cases, which will lay the cornerstone of the discussion to improve the scheme in Korea. I sincerely hope that research results shared during this year's symposium will be a great help to the policymakers with an interest in the fiscal management. This year, we completed overseas joint research to examine cases of the 7 countries in using accrual information for fiscal management. Each case was very interesting and informative. Based on this, we would like to focus and more dive into individual exemplary case from next year. I would like to extend my gratitude to all the participants who have been here with us and see you next year at the 3rd KIPF Public Sector Accrual Accounting International Symposium. Thank you very much.